Hey, good morning, everyone. Welcome to Friday, January 12th. And so my first full trading week back here after the holidays. Looking okay so far. We're looking okay. We had an interesting day yesterday with the news that came out, the CPI or whatever the hell it was. The market really flushed out a lot of people. Okay. We did a look below 47.80 and fail. And the trade that we take using the 1 minute candles, this is the trade that you are going to work up to. Okay. This is going to be, how they say in baseball, you go to the show, you work up from the minor leagues to the major leagues. This is a major league trade. And eventually, if you put in the work, you'll be able to do it. Where the process is the same, right? It's difficult because you've got 3 half-hour periods. And I'm just going to talk for a little bit for the larger traders who never speak. We do have some traders in this room who do trade um, 6, 7 figures. They never talk. But when you see this movement here, now our buddy Funk, if he's in the room this morning, he made a video that shows you how this trade works on a short time frame. This trade is very complicated and it's not for beginners. What you want to do is when a market breaks a level, looks below a level, you got to give it time to reclaim the level and you need to take the long here, right? Because what it does is it flushes the level a few times before it reclaims it properly and then makes this move. If you take it too early, right? If you take it too early and you have bad risk management, you're most likely going to get flushed out of it here, and then it's going to go in your favor, right? The subtleties of this trade are very difficult to grasp. That's why you've got to do it on a 1 minute chart and get good at it and get good at understanding how order flow works. And I'm not talking some cheesy order flow software or anything like that. You need to understand what happens when that market reclaims in that TPO, that half-hour low, and you have to wait, right? If you have a big account, what you can do is you can use these stops here. And what you can do is you can use this lower stop here. But think about it, because this is a lot of room between 79 and 72. That's 7 points, right? So 7 points management, you need a big account to manage that area. Do you guys understand what I'm saying? Right? So you don't want to take that trade just willy-nilly. You need the trader who's learning this trade needs to wait for this bar, or hell, even this bar, and give up this real estate for acceptance, right? Because this trade will clean out your account if you do it wrong. But because we have larger traders in the room, I think it's necessary that I talk about this kind of trade, because what the trade entails for those traders is the look below 47.80 and fail. When it reclaims, and if you build that position between 80 and 88, your first target is 4803. That's a nice trade. If you do 20 contracts on that, 20 E-minis, and say your average is, say, 85, 47.85, and you're getting out of them at 4,800, that's a decent trade, right? It's 15 points on 20 contracts. Do the math, right? At $50 a point, right? 15 points and then 20 contracts. That's a $15,000 trade. That's how you make $15,000 in a day. That's what's possible if you master this setup, right? It's entirely possible. Does everybody kind of get where I'm going with this? Right? But this is not a trade for new traders because you need an account and you need experience and you need to be able to manage your position without being emotional. Because if you're emotional and you don't know how to cut risk by getting rid of contracts at a loss, you're going to destroy your account. So that's something that you need to practice getting out of bad trades on a 1 minute chart with the micro so you can program yourself, train yourself to systematically cut risk, right? This is where you're a professional. This is where FOMO and all of those excuses that people use to not be disciplined and professional, that's where this comes in. The way to avoid all of the traditional excuses that retail traders make to avoid discipline and being professional is to practice the one setup 1,000 times on the micro and slowly scale it as you gain experience. If you start to scale your trades in size and time and you start getting stopped out or you start making mistakes, you need to size down, right? Get it right, then size up. Sometimes this takes years, right? Before you take this trade, say if you just started trading today, you're going to be looking at least 3 years before you can even attempt something like this. So manage your expectations and work towards it. Okay. So I said yesterday the look below and fail of 47.80 targets 48.28. And we got up to 48.20 something, right? We're about 8 points shy of that because this excess was hard to get into. But a lot of people yesterday were saying that the market was going to do this. And as soon as it looked below and failed, I posted on Twitter and I said, listen, you guys, look below and fail 47.80. Now rotation back up. 28 is the target. And we got pretty close, right? So for those really large traders who, say you bought 20 to 50 contracts between 88 and 92, and you could sell them up at the close at 48.12, as they say in Saskatchewan, that's a good scratch, right? So right now, our overnight inventory is about 75 to 80, maybe even more percent short because all of the trading is underneath yesterday's close. This move here caught a lot of people short. So tactically, at 48.04 and just underneath it, the shorts are all bid to cover. That's not Bitcoin. That's bid to cover. What does bid to cover mean? It means that the buy orders are here. And every time the sellers come down here, the buyers buy and the market moves up. Now we're coming back down to that area. So when London opens, we're going to see if we break and hold under 48.04. Okay. And then your next lower structural stop is going to be 47.96. Is everybody clear on that? That's what's going on in the big picture. Cool. All right, now let's go take a look at our structure in the night. So yesterday we closed here at 48.12. And as you can see, all of the inventory pretty much is underneath except for this little chunk of volume and these hour and a half. Over yesterday's cost basis is here. Overnight cost basis is lower. As the drive up, now we allow traders to come in and cover. So we're going to watch. We just put in a new overnight low. And we stopped right at the middle of yesterday's range to the tick. Right. So that overnight low is now, as Dalton and all the Chicago old boys call it, half back. Right. Half back is just the middle. You'll hear people say half back in market profile. It's just a weird Chicago way of saying the middle. Okay. I don't know. I don't know where they came up with that. It's just the middle. Right. It's just the middle of the profile. It's just the middle of yesterday's range. So yesterday's low is all the way down here at 47.73. Yesterday, we caught a lot of people short when E period went down and put in that low, and then F period couldn't come down and take it out. You'll also notice that F period could not take the low of D period either, right? And then G period here couldn't get anywhere near the low of F, right? And look at all this volume down here. A lot of people initiated short here and now they're trapped. Okay. There's a lot of trap shorts in this area because there's a lot of volume down here. Not everybody bought, not everybody covered. A lot of people are trapped underneath the value area or cost basis of yesterday, which is 47.88. Okay. So now let's see if we can take this out. Halfway back. Okay. You know what? We always do that. We cut down these sayings just to confuse people. Like the float. The float used to be floating supply in a stock, and they just cut it down to float. Right? And people are like, what the hell is a float? Well, it's the amount of stock available to trade. It's the floating supply. Because when you take a company public, you float the deal. When you say G could not take out the D low, that's this here. How do you trade that? You use your 1 minute candle chart. This is a very difficult trade to take, always learning on market profile. Right? So how do you take that G low trade? You practice. Where is it here? You practice these trades 1,000 times before you even attempt to take that G low trade. Does that make sense? You don't take it. You watch it for about 3 years. This is the trade I was just talking about here. Right? So what we do is we train ourselves doing this, and then we'll be able to cross-reference that 1 minute chart with this, and eventually it will start to make sense. But this is not a trade for new traders. Unless you're making 1,000, unless you're really making good money every day consistently, like you to even think about taking this trade, I would recommend that you should be making at least 2 grand a day trading. If you're not making 2 grand a day trading consistently, you should not even attempt to do this trade. What you should be doing is watching and learning, because you don't have the skill to do it. Right? It took me 12 years to figure it out. Could we still see some more liquidation? Bingo, Phil. That's exactly what we're looking for right now. That is exactly what we are looking for at this time. Yeah. I'm not sure how long you've been trading, always learning, but those more sophisticated trades do take years of practice, right? Yesterday was a momentum trader's dream. The moves back up were all short covering. At nighttime, the bids are not as strong because the bids are coming from short sellers who are trapped. So they're going to try and weasel out cheap product. They're going to play hard to get, right? But the problem is with short sellers, if they see the offers lifting, they'll come in and buy. So once again, this is an area, and I'm gonna put that video on that Funk did for us. Funk, are you in? Are you on Zoom? Where are you at? You might have gone. Oh, there he is. Funk Trader did a video for us. I'm gonna post it. It's on my other computer, but I'll post it and we'll walk you guys through it. Uh, I know what I can do. Put it on a. I can put it on another hard drive. Transfer it over. So now we're putting in a new overnight low. Let's see where we end up. Just now, this is the time where we just let it do its thing. I'm going to bring up my 1 minute candles. So my balance was 48.07 and 3/4 to 9 and 3/4. Yeah, 97 and 3/4 stops. Yep. Oh, liquidation is good in a market. We get better price action when the markets liquidate. Now I'm a look below and fail trader, so I'll be looking for consolidation before taking a long. If you are short, if you're short, say over 48.03 and 3/4, 48.04, you're just waiting for the market to offer lower so you can cover, right? Yeah, decent volume coming in, right? Where's our lower stops? Right, we've got our next lower stop is 47.96 half. There's nothing here right now. So we're trying to establish an overnight low. We'll stick that there for now. Any questions? It's a bit slow while we're waiting here. It's 5 now. Ugh. Sorry, guys. My intentions were good. I'll try and get the file over. I might have to do it tomorrow. Yeah, right now, in the larger scheme of things, right? Yeah, this is very mechanical, Mad. Good spot, right? So what Mad's saying is, what he's talking about is, you see this H low here? That's where traders got trapped when I took out the H high. Sorry, not the H low. So that's where the short covering you can see, right? It's very mechanical, very precise trading tonight, which is generally how Globex trades, right? Unless there's some sort of news event, right? So what happened is when this period took out this high, people were using this high as their stops. And what happened was the market went up and trapped shorts underneath 4,800. So that's why there's a bid to cover underneath 4,800. What I'll do with that video is I'll do a video and I'll talk over it and then I'll post it in the room. Ooh, the J and K period? Sure. About that. Now, you're in the course, so I noticed that every day you talk about the J low and that trade. When J period opened, it came down and it couldn't get any lower, right? That is a automatic long up. But once again, that trade is easier to take if you use the candles. I don't have a candle reference right now. Maybe what I should do next week is try and do a Zoom when J and K period come on, right? Once again, this is not an easy trade to take, but what happens is J opens here, right? It auctions down. It cannot get down to that H high, and then you get rotation back up. The rotation's much easier seen on a candle chart, right? The trade, I used to take this trade all the time. I haven't traded that this week because I'm on the laptop and it's slow. But that J low trade usually means that K can't take J. The trade is to the upside, right? Because you get a move up, Ota, what happens is you get a move higher, right? And then J opens and it corrects inventory just for a little bit. And when the shorts come in to buy here, that's when you buy and go long. I'm still not understanding these single letters and their significance, but I notice you always seem to point out something like they are trapped here or at the last single. But there is no single prints in yesterday's profile, John, right? It looks like they do. If I compress the profile, now this is confusing for people at first. There are no single letters if you compress the profile. When you split the profile, it looks like there's single letters. Okay. What you have to understand, John, is that if I was a short seller, okay, and I was short underneath 4,800, right? Say I'm short 47.89. I'm a large trader. My stop is going to be at the G high and the H high, right? So traders, when H opened down here, people would have shorted it. They would have put the high of H at their stop. And when the market took that stop, that's where they are trapped. So you're short under 4,800. The market goes to 4809. You're trapped short. So at night, you're going to come in and try and buy this area. If enough people kind of buy this area, it's going to sustain price and hold it up. Make sense? Don't worry if you don't understand it right now. It's going to take some time, but I'll explain it a million times. Yeah. Most retail people have no clue what trapped longs and trapped shorts do to influence how markets trade. Even though they do get trapped long and trapped short, they have no clue how that influences how markets trade. Very few trading educators talk about it because I'd say maybe 1% of people who teach trading have ever traded or manipulated a stock like I have. So for 30 years of my life, I have used trap shorts to hold prices up so my clients who own the stock can sell their stock at higher prices. It's leverage. It's leveraging people who are trapped. You leverage them, they hold the price up, right? They hold the price up so the people who own all the supply are able to sell at higher profits, at higher prices for more profit. It's very strategic. And people who don't understand the strategy get taken advantage of, right? So, all of these things. Oh, yeah, I'd love to. That's a great idea. That's a great idea. Trying to find a chart. I'm going to show you guys something. If I can find that. Ridiculous chart. I'm going to show you a chart of a stock that I worked on for a client where we trapped shorts for 2 consecutive years. And the stock didn't have a down day in 2 years. We actually got written up in Bloomberg for it because nobody had ever seen anything like it. Let me just try and find it. Where? There it is. Oh, where is it? People who've been in the room have seen it. Yeah, here it is. So London's put in a low. Let's see if we take out that K high. So that's a chart I built. So understanding trapped longs and shorts, that was my life. It was all I did. Hey, Sadiq, how you doing? Look at this. Look at them come in. Wow. Back to VWAP. Sorry, I was doing the trap short thing, but that's your look below and fail right there. Sorry, a little late, right? But right back to VWAP. What does this tell us now? It tells us that the shorts are really trapped underneath the middle of yesterday's profile. Good stuff, Funk. Nice. Right, we took the stops and we're right back to where we started. But see this trade here, and I'm sorry I didn't call it out because I was looking for that stupid chart. This trade here is the exact same trade as this trade here, right? This is a look below, go sideways, fail, reclaim, take the trade. So what you would want to do is you'd want to be going long, not here, not here, but here. Once it reclaims the level, so your long 48.05, your stop is going to be under three quarters. First target, 5 3/4. Next target, VWAP, or 7 3/4. So you do this trade 1,000 times. Then you can start looking at this trade. Does everybody see that? These are the same trades. This is the look below and fail. This is the look below and fail. Right? This is major league. This is minor league. But this is practice for this. No, new PC is still in the box. I'm going to do all that tonight. Nice work, Jan. That's fine. Practice makes perfect. It could have just stopped at which level, John? Okay, so let's go through where it doesn't work out. Okay. If it just stopped here and you took the trade, right? Let's just say you're long 48.05 and it stops. So how do you know whether or not you should get out of the trade? Because if you're long 48.05, you put a sell order at 48.06. You buy three contracts, 2 to 3 contracts on the micro. And if that 48.06 does not get sold, get the hell out of your trade. If the trade, if you get long at 48.05 and it goes back down under 3 3/4, get out of the trade. Does that make sense? So that's how you, right? That's how you have an out, right? You don't just take the trade and blindly hope it works, right? You have to tactically think, what am I going to do if this does not work? And that has to be predetermined before you take the trade, right? That's where you've done your reconnaissance and you know your levels, right? That if I get long here and it fails, I'm out of the trade. There's just no reason for me to be in it. That's why every time you buy a position, every time it reclaims that level and you're long, right? So let's say right here at 48.05, you're long 3. You put one for sale at 6, one for sale at 7, one for sale just underneath VWAP. And when the market goes, it takes you out. Now, you say, oh, JJ, I could have held it to here. You don't know what's going to happen here. Here, right? This is going to teach you, right? Where later on you can buy 8 contracts here, sell one, sell one, sell one, sell one, sell one, sell one, right? The test trade would have been 3 contracts. I am talking about the test trade. Sorry, I didn't make it I didn't spell it out, right? I didn't spell it out. We're going to have some selling at the close here. Generally, there will be some orders parked here. Let's see if they do. What the short sellers, if you are short now and this market takes the close, be careful because the next set of stops are right before the overnight high. And if we take those stops, your next target up is going to be the N high, which is 48.15 half. That means it'll get over the double imbalance. But let's see what happens. Those who are looking for a short, wait for the backside of the move. Always 5 p.m. Would you show the trade on the TPO using the overnight low as a structural stop and you use the upside stops as target? So this trade, Sadiq, I would take this trade. I would still take this, right? This is a tough trade to take. So how I would manage this trade, if I would say I don't have the, okay, so you're asking me to blow off the candles, right? Right. So you just want to trade pure TPO. So what you do, right? This is hard. This is why I came up with the candles so it makes it easier for you, right? This is a tough trade. So when L period doesn't take K, you get long above half back. Your danger level is the L low. Your absolute out is the overnight low. So long, here, I'll put it where it doesn't disappear. One sec. So you're long, danger, hard stop. Now, target, K high. So if you look on the candle chart, right, that means you are transacting here, right? You don't use the candle stops, you use the levels. That's why it's easier to use the candles. You might see it differently after you watch it a few times, right? That's why you wait here. Because sometimes in Globex, brother, this can turn into a total crap show. This time it worked perfectly. That's why I use this, because if it reclaims a level and can't test it, then it goes back up. You can't see that as clear here. This trade, you're going to get stopped out a lot. Tonight it worked perfectly. But generally, when price action's a little ugly, you're going to get stopped out. Just saying, give the candles a try. I hated candles when I started trading, right? I ran this room for 3 years, not using candles. And then I learned how to use them properly. Works like a charm. And most people, right? Well, they don't do anything for you, John, because you haven't looked at it long enough. That's all. Right? People come up with this like this doesn't work for me. It's because you haven't put in the work. That's all it is. If you put in the work, it'll work. You just got to put in the work. I used to say the same thing too. Then I spent a couple of years looking at candles for 18 hours a day. And it worked, right? Ask Funk. I never used candles, right? But I came up with this because 90% of people trade off candles. Actually, more than that. TPO charting is you take the lessons from TPO and you put those lessons on a candle. You got to put in the time, folks. You got to put in the time. It's not going to become TPO or candle. It's not going to become obvious at first. And it's frustrating as hell. Yeah. It's frustrating. That's why what you have to do is you have to watch markets. You have to watch markets for an extended period of time. You have to take test trades using the sim, right? And that process before you actually become even make a dime in this business really, really takes time because what you're doing is you're honing your process and it's not easy. It's not easy at all. It drives most people absolutely insane. And now we're going to distribute. So we didn't take out the overnight high. So now we're going to take the position that the traders are long underneath 48.09 half, and they're going to sell it here at 48.12. And if we run out of buying, we're going to come back down to 9 3/4, 7 3/4. It's that's the thing. It's just repetition, and that's why I did that 5-step thing. It's supposed to make it easier, but if you fight it and you resist it, it's going to take longer. But that's okay. That's that's just the business, you know. That's just the business. Any questions? Just keep plugging away at it. I will do, which I'll try and do a session on this whole trap short. Let me work on it this weekend. Now we're in distribution, right? So there, now we've got, say for example, people are trap short under 48.07. Okay, cool. Great question. All right. So the market sold off here, John, right? So the market, right? People don't want to pay 48.09. They don't want to pay 6. They don't want to pay 4. So the size traders who own product underneath here, you can't see that right now because it doesn't show it. They'll sit there and they'll sell the market down to an area where their cost basis is. This area here is where the shorts come in and bid to cover. Okay. This is price stability. No, we just took the overnight high. So what happens is the shorts start buying, and I'm going to show you on that video as soon as I I'll do a video. I'll do a new video using Funk's because Funk's video shows this beautifully. Okay. The shorts buy to cover, longs build a position, then they cut the supply and the price goes up. The offer starts moving higher because people who own product here and underneath here realize that there's buyers and they jack their prices up. Wholesalers and traders who act like wholesalers, right? Wholesalers control supply. So say you had bought 1,000 contracts, John, underneath 48.10, right? As soon as you see buyers coming into the store, you start moving price up. They start chasing price because that's what human beings do. Human beings chase price. That's why Dalton says price is advertising, right? The best way you can get people to buy something is to take the price higher. People will chase the price higher. Right? It's the same thing. Like I always use the nightclub reference. You know, I ran a nightclub, open the club at 9 o'clock, start a lineup at 10. The club's empty. People will stand in line. That gives the illusion that it's a hot club, and they come in droves, and they'll stand in line for 3 hours to get in. One thing I learned working in a boiler room is that buying begets buying. When people see other people buying, they come storming in. It's herd mentality. You can buy it at 48.10 all day long. Nobody wants it. As soon as you take it to 16, everybody's there. The singles 47.10 to 47.21. 47.10. What singles? Can you show me the singles? Sorry. Oh, there. Yes. Yeah, exactly. That's from the yeah. That, my friend, the JJ, that's off what you've got highlighted, that green box. That is that's the Fed day. And we came in, we dipped into that, and there was a ton of shorts trapped. They stormed through the door. It's beautiful. You're right. Right. You know, right there in that green box that you're showing, that's where the shorts were trapped. The market came back down there a couple of days ago and everybody shorted it down there, not knowing that people were buying the hell out of it. And the market ripped all the way back up. Crazy. I'll show you here. Right here. Right? Right here. These single prints. As soon as the market got into this area, see, everybody shorted this when the smart money was buying it. And that has pushed price higher. It's fascinating, and it happens over and over and over again. Now, this is the reason because people don't understand the concept of single prints. They don't understand the concepts of trap shorts. And 95, I'd say probably 98% of traders don't even know what market profile is. It's kind of it's a hidden thing. Nobody really talks about it. Uh, Dalton teaches it. And until I came along, really nobody else taught it in a class, right? Um, and Resnicek uses it, and he used to do a lot of webinars on how to use it, but he doesn't do that anymore. But there's no emphasis on it. Really strange. It's hard to understand, especially if you read the books, right? The books are not clear. The books also don't tell you where to take the trade. Very, very sort of scholastic, academic. They're not really set up for people to make money. They teach you the theory, but they don't actually teach you the execution. And that's what I'm trying to do. Some days better than others. Okay, folks, that seems to be it for this morning. Oh, and it looks like we're going to have single prints to the upside. Yikes. Yeah, we do. So now we can tell that our friendly neighborhood shorts are trapped underneath here. Use this thing. So now we're backfilling. Okay, so John, real quick, right? We went up and now we've run out of buyers here. So we're going to sell the market down and let's see if it holds 13 and 3/4, which is right where the shorts are trapped. No problem, man. Thank you. We'll see you guys in RTH. Have fun trading. Thanks, Kiwi. Have a good one. And we'll see everybody in RTH. Those of you who are done for the day, have a great weekend. It's good to be back. And I'll work on that video. Thanks, folks. Bye for now.